164.
Hi, good morning. We'll be starting in another 5 minutes. We have a lot of people joining in. So just to benefit, others to join in time, just give us 5 minutes and we'll start. Hi, good morning. Welcome to the 7th studio event of Research and Ranking from the Informed Investor segment. We have already 300 plus participants who have joined in today. I am Shalraj Brahmbhatt. I head the operations and customer support team here at Research and Ranking. I am going to be your host for today's webinar. Before we start off today's webinar, let me start by wishing a very happy Gudi Padwa to our viewers who are joining in from Maharashtra. A very happy Ugadi to our viewers joining in from South India, and a very happy Baisakhi to our viewers joining in from North India. Today, we have a very interesting presentation titled Second Wave or Second Chance lined up for you all. This event is being broadcasted live on YouTube, Facebook, and Twitter. In case someone gets logged out, you all can tune in to our respective channels. During the presentation, if you all have any questions, feel free to drop in the questions in the chat box section, and we will try to answer these questions at the end of the presentation. Without wasting much time, let me introduce to you all the speaker who's going to be delivering today's presentation, Jaspreet Singh Arora. He is the CIO, Chief Investment Officer at Research and Ranking. Jaspreet himself carries almost 2 decades worth of experience working across various broking houses. He has been leading research teams into picking great stocks for their investors. In his previous stints, he has held various leadership positions in systematic shares, angel broking, and Anand Rathi, to name a few. Over to you, Jaspreet.
Hi, good morning, everyone. Thanks, Sharaj, for that introduction. First of all, hope all our viewers and participants, they are doing great. They're doing fine, and their families are doing fine. Um, that's at the most priority, if I might say, or the number one focus area for everyone as we speak. Uh, Happy Gudi Padwa, Happy Ugadi, Happy Baisakhi, Happy Vishu to all our all Indians, and it's a festival which is being celebrated right from down up north to down south, and it's a very specific reason we have chosen this auspicious day. It's a new year, and what better a day to come and interact with you than this, as we genuinely believe that this is a new year also for people who are either starting afresh or who want to take equity investment as a opportunity, serious good opportunity for the next 1 year. Just a few pointers before we start. We'll be using much of English and Hindi, so that everybody is conversant. They're comfortable, and I would request if everyone can sit back, relax, just as if you're watching a movie, because that will and just enjoy the next 1 hour. I'm sure, and I promise it will be worth the time spent with us. And if anybody wants to go back and watch it at leisure, or see some of the slides in detail, it will anyways be available on YouTube later. So in case I skip through one or two slides, so please bear with me, it will be available later. So there are three big objectives we're trying to achieve through this studio event. First and foremost, what is the current COVID situation according to us? How do we handle it, and how do we put it in perspective of equity? And it's not that we are not affected. At least most of us, and me personally, we've had cases in our immediate families, and as we speak, I have immediate family member being affected, but the confidence is high. We know that this time too shall pass. And if there's an opportunity, we want to, from an equity investment perspective, we want to take full confidence and encash on it. Number two objective is, or number two agenda that you'll see is, what are the similarities between now and 2004 and 6? We have about 6 to 7 similarities. We'll see what are those. And last is obviously the research and ranking. How do we construct a portfolio, and what's our strategy? So let's move on to the first part, which is the current COVID situation. So as we all know that we've already surpassed the daily cases, which is now close to getting 2 times that of the previous high. So the previous high was in September 2020 of 98,000, right? Now, last evening when I checked it, we had close to about 1.7 lakhs. Interestingly, or to look at it positively, the mortality rate this time around is much less, and therefore you see the daily deaths are much lower, even though we are close to doubling the daily cases. So that's the starting point, and we'll have more of such data. So as an investor, should you be worried? Let's try and answer that question, and also try and answer if, now that we're going through the second COVID wave, and it's now all over us, all over India, across our neighborhoods, what do we do as an equity investor? Do we sell everything and sit on cash? That's option number one. Option number two is, do we book profit and try and re-enter? That's kind of trying to say timing the market. Or we just sit, relax, just be relaxed and buy on every dip. So let's see what we are trying to advocate here, and let's try and give you the same confidence. So here we're just trying to put across a message where, this is our interpretation of saying, in a house, maybe there are two rooms where there is an elderly, or maybe, somebody who's more kind of surprised stroke fearful, and who's watching the daily channel of COVID cases now going past X number, Y number, deaths going so much high, Bombay crossing 10,000, Delhi crossing 15,000 per day, etc., etc. And how much is he relaxed? And probably in the same house there is another gentleman, a much younger, or could be even similar age, but he's done his studies. He's a long-term investor. He does watch the channels. He's very much aware, but he's looking at a 1 year returns. He's looking at 2 years returns. He's looking at 3 year returns. He's going the methodical way, and trying not to get perturbed by the daily swings in the market, and especially trying to get distracted by the news. Okay, let's see what's the difference between now and September 20. The on ground, the hospital infrastructure, be it ICUs, number of beds, obviously is in a far better situation. We are far more equipped to handle. The testing average per day has gone up drastically, from almost 8 lakhs an average a day to almost 13-14 lakhs as we speak. The vaccine was under development in September of 20, and today we have 2 in use, and many more are waiting government clearances. The fear factor, very important. This is what is a very big difference, was very, very high, and now it's considerably lower, for good and obvious reasons. The manufacturing facilities were closed, or they were slowly resuming production. Today they are continuing. They are either 80% or 100% operational. Operational in the sense that producing goods depending on demand. It's a function of demand and not the lockdown. Work from home continues partially, but a great extent we are working from offices as well. Restrictions are not as much as it was earlier, but there are semi restrictions in most parts of the country. This is what I want to spend the next, and we'll spend about the next 5 minutes trying to understand why one should not be fearful, and this is hardcore research. This is hardcore discussions with experts, right? And trying to get data and bring it across to you and give you that confidence. The death rate or the mortality rate, and as a disclaimer, nobody would want even one death in any part of the family or country. So that's obviously one obviously wants that. The fact is that the way to look at it is still lowest in the world, which is at mortality rate of 1.3%. It's you look at all the countries, it's still amongst the lowest, and we are now close to a total number of cases close to Brazil, and in terms of daily deaths, as I said, we are still lower than Brazil and some of the other countries. This is what another thing I wanted to highlight is the Maharashtra is used to be about 60% of the all India cases till about 15 days back, when the all India count was 1 lakh and Maharashtra was over 60,000. Today, Maharashtra seems to be heading down. At least it seems to be peaked out, while the all India cases have gone up, and therefore Maharashtra's share has come down to less than 40. But the larger point I'm making is that if we control a couple of states, which is Maharashtra, UP, Chhattisgarh, Karnataka, Delhi, a good 2/3 of these cases would be addressed. And that is how one should look at it. And Maharashtra alone contributes 14% of India's GDP. So yeah, definitely that's a big impact to the extent that Maharashtra would production comes. This is in terms of the vaccine coverage that we have had so far, and right up is Israel, where 61% of Israeli population has been vaccinated. Now this could be one dose, it could be two doses, or it could be just the one dose, which is enough. In some brands, they just advocate one. US, UK, all of these countries have got more than 30% of the population getting vaccinated. While in India, we are at 7%. It's not a bad number. 7% is about 10 crore. We should be in that 30-35% population getting vaccinated, maybe in the next maybe in a couple of months from now. This is another statistic I wanted to bring across to you, which says that in terms of vaccination, Rajasthan is doing well when it comes to Rajasthan and Gujarat, both when it comes to 60% plus of the population getting vaccinated. And believe me, and I'll show it to you in subsequent slide, why this is the most vulnerable section in the country. So Rajasthan is doing a good job. 60% of the 60% plus population over there has got vaccinated. Gujarat follows very closely, and there are a couple of other states like Chhattisgarh, Himachal, who are right up there. And as we saw, one of the reasons why Maharashtra is kind of having more cases, and also some of the southern states, you look at the bottom the bottom bucket, where you see 30% in Maharashtra and sub 20% in most of the other states where the vaccination percentage is there, which is lower. Now, this is where I wanted to draw your attention, is that, and this is just a sample, Mumbai, taking Mumbai as a case study. The number of deaths that have happened between a fortnight, which is about 377, out of that 286 were, or 76% of those were people who were 60 plus years of age. There were another 21% of the people who were in the age bracket of 40 to 60, right? And a good chunk of it, a majority of it, had comorbidities. So the larger point I'm making is that 87%, which is 97%, which is 76 and 21 of the people who have had to go the hard way, which is the mortality rate, is from sections which is 60 plus, or the people having comorbidities. So if you look at the mortality rate, which is about 1.3%, but if you look at the incremental mortality rate, which is 0.6%, and I'm saying incremental, it means the mortality rate which has been there in the last month or so. If I remove the population which is 60 years of age or more, which is 75%, the mortality rate comes down to as low as 0.15%. And just let me give you another statistic which I heard from a leading industrialist last evening, was that we had about 7.5 lakh, 7.3 odd deaths on a monthly basis before COVID struck, right? And how much has been added to that is 13,000 per month. So that 7.3 would have become 7.43 or thereabouts, right? So that's 98% of the deaths still occur for other reasons. It's only that 1% or which is due to COVID. But it's just the attention that is COVID is getting today. This is again I took from a doctor, and this is live, and you can go and check it for yourself. Where Dr. Sujay Shad of Gangaram Hospital in Delhi, a very big hospital there, they all the 500 doctors at some stage or the other would have got exposed, because they have been dealing with COVID patients right from March of last year. 37 of them got infected, right? Even though they had taken the vaccine, while the other 93% are safe and sound, they have not got infected. And this is how the vaccines are also claiming their efficacy rate. So the question I'm posing to you is this: how do you interpret the 93% efficacy rate? Do we see it and this is not, there are two ways of looking at it. This is out of every 100, 93 will get COVID and 7 will not get it. It's not like that. It is each individual will have a 93% chance of getting a COVID or not getting a COVID. So it's up to us. How do we look at that statistics? Is it the positive way of saying, if I take the vaccine, I have a high chance, 93% chance of not getting, or do we look at it the other way, which is I will still get a seven, there's still a 7% chance. Why even take that chance? So I leave it to you to decide what's the how are the odds stacked up. To me, and to us, it's very, very clear. So the larger point I'm making is that the difference between now and then is that vaccine is available. We've traveled through the journey from September till date, where the various bodies have given approvals for availability of vaccine en masse, first to vulnerable section, and now 45 plus years of age. And as we speak, about a couple of days back, we had already vaccinated about 10 crore Indians. This is a slide where I want to take a pause and ask you to see for yourself that we have now about 3 vaccines which are getting administered. I'm just including Sputnik because they got it comes from the desk of from the company of Dr. Reddy's and Sputnik of Russia, which got the approval last evening. So we have already about Covaxin and Covishield getting administered. And now we have Sputnik. There are many other vaccines which are under development, which is from Zydus, Bharat Biotech, the Serum Institute, another one which is under development, and that could get the approvals hopefully in the next couple of weeks or months. And most importantly, we also have Pfizer and Moderna, which are vaccines with a very, very high efficacy rate, right? And they are already getting administered. And I'll show you in the next slide to the extent that they have a coverage. It's getting available to most advanced nations, right? And this is what I meant. So a Pfizer today is available in 61 countries. An Oxford AstraZeneca, or the one that we are getting from the Serum Institute, is getting administered in 41 countries, and Moderna is getting administered in 27 countries, right? So the top 3 vaccines in the world today, right, out of the top 3, we only have one. The other 2, Pfizer and Moderna, can be made available anytime soon. The moment the government of India gives the approvals, as well as they will also have some spare capacity available, let's say 2 months or max 3 months down the line, when much of the vulnerable US, UK, and other European nations, maybe Japan, they get vaccinated. So 2 months later, maybe we'll have the choice of maybe 5 or 6 or 7 vaccines, and that is where the acceleration will start. And hopefully before the end of the year, the entire country, the vulnerable population of the country, the people who really want to go take the vaccines, would much of it will get administered. So the point till this slide that I want to make is we have done enough research, enough back end, enough discussion to get that confidence that we need to get vaccinated. It is being available. It will be made more available going down the line. There is no other choice but to welcome it with open arms and live that life we used to live before Feb of 20. So, and that's the fear factor one should remove the moment one gets the first jab. Okay, on ground activity, it is very, very high compared to what we thought 6 months before, even 3 months before, and I'll show you where also. GST collections are now at an all-time high. 1,25,000 crore of GST collection was unimaginable, let's say, even 3 months back, or maybe when we were in the month of November. And we are surpassing the previous month every month. Obviously, April might see some bit of a dent, but it should definitely not be very, very negatively surprising. Service PMI is still very, very healthy at 55. Anything above 50 is healthy. And this is despite, mind you, this is despite a lot of industries like a hotel or tourism, the malls, multiplexes, restaurants, entertainment zones not being operational. Despite that, we are at a 55 PMI, and manufacturing PMI was doing was doing great right from the moment it was allowed to start. How do we get that confidence? One of the ways, obviously, is that FIs have been net buyers, and they have pumped in the max that they could in the last 15 years, by pumping in 2.75 trillion so far in the last financial year. That's the amount of that's the amount of money that's got pumped in the Indian market. Through this slide, we wanted to show you the despite Nifty, and this is okay. This is the journey from the last 15 months, right from Jan of 2020, 1st Jan 2020 till 31st March 21. These are 5 quarters. In that 5 quarters, Nifty is up 21%, point to point, right? From 31st December 2019 till 31st March 21, Nifty, for that 15 months period, Nifty is up 21%. It's the top 3 sectors which are export heavy, which are the it's not getting impacted as much because of COVID, which is IT, or in fact they're getting positively, they have got benefited, which is IT, pharma, and metals, which have grown at subsequently substantially higher than the Nifty performance. So the larger point I'm making is that there would be opportunities, right, that would enable our portfolio to still grow reasonably higher than the benchmarks. And this is where all our attempt is to find out what are some of those spaces, segments where the stocks that can do well and much higher than the benchmarks. The volatility index, again, trying to juxtapose the situation now versus what it was in March, April 20, which was the worst case, which was the worst scenario. So the volatility index then shot up from 2530 to 84 when the daily cases were negligible. And look at it where it is today. It is at 23 when the daily cases are at 1,70,000. What does volatility index mean? It obviously means the amount of volatility that is there in the system. When it says volatility, it means the amount of the percentage up to which stock prices go up or down. Let's say during March and early April, the prices or the indexes were going up 10 or 10% or more on a daily basis, up or down, and that's the kind of intense volatility. We don't have that. Yesterday was the only the biggest fall that we saw in calendar 2021, which is about 3.4% at benchmark levels, and some of the other benchmarks going down 5% or more, including mid caps. So even then, the volatility is still manageable at 23, and it's so, folks. What I'm trying to tell you or put across is the moment volatility spikes up, that in itself will give us a clue or an idea that the upcoming situation is it as scary or it's not, right? This in itself will be enough an indicator. Corporate earnings have done fantastic in March 21, much to the surprise of everyone. We were most of the street was expecting a minus 20% growth, actually a 20% degrowth in April, May, which over a period of time became more like a flattish situation. And as we speak, we've just ended March, results are not out, but based on the reports from leading brokerage houses, it appears that we are set to clock more than 20% growth on Nifty in the last financial year, which was March 21. And what more can you ask for but that the momentum, it looks to be continuing in the next 2 financial years with more than 30% growth next financial year and plus 20% the year after. This is again from the experts, and we also have done our bit of analysis to kind of vet it, and we have reasonable confidence that this is something achievable. This is something that's been in the press. United States has more or less doubled their balance sheet in the last 12, 13 months. What it means is they have printed so much money in the last 15 months that they had printed, let's say, in the last before the last 15 months, they have printed almost a similar amount of money that they had printed till about December of 19. And what it does is it gives money to all sections of the society. It kills inflation, right? And it ensures that people have that safety and they are spending. Excuse me. India has underperformed so far in the last month, in the last 1 month and 3 months, when we compare it with other developed economies like, and this is updated till as of yesterday, where we had a fall uh, where we had fall and most of the other indices were flat globally. So we have underperformed in the last 1 month and also 3 months. So 3 months, we are down 2%, while most other economies are up between 4, 5, and 10 odd percent. And this is clearly because that the regional factor that India is going through a second wave and which looks to be harsh. Therefore, there has been some bit of FI outflow and some bit of selling from HNIs as well as DIs. Okay, this is where part one stops, and this is where I would say that it is situation. To summarize, situation is not as worrisome or as bad as one would look at the headline numbers when you go deep down. Maybe 2 months down the line, we would be probably smiling and thinking that we had a very good opportunity at an index of 14,500 plus minus, and we did not encash on it. So let's not have that feeling 2 months down the line. Part two of my presentation would be what are the similarities between 2004 and 6 and the next 2 years. So just those 2 or 3 or 4 years that India saw the best growth, and the next 2 years. So bond yields, look at the credit growth, look at corporate profit to GDP, look at earnings doubling, Brent crude being moderate, not expected to go up drastically, some of the global tailwinds, and a range bound dollar and a stable government. Let's start with the bond yields. And I'll spend a minute here, trying to highlight that the bond yields have slipped from 8% to 6% in the last 12 months, probably 14 months. And now they are inching up. There is no need to panic, right? As we have seen in the last 2004, 2006, when the bond yield came down from 8 to sub 5%, I mean, actually came down from a much higher level, but let's say, on a more sustainable way, on a more steady state, 8%, they actually went down from 8 to sub 5, and from 5 they went back to 8. But the duration or the over which it went from 5 to 8, that was exactly the time 2004 to 6 that India saw its best growth in terms of earnings, in terms of profitability, in terms of indexes, in terms of stock prices, right? And it's obvious because I can spend more time on it in case somebody has any question on this later. But the larger point I'm making here is that one should not get perturbed by the rising bond yields. They would go up. But if they're going up, it only indicates that there is strength in the economy, there is purchasing power, there is good inflation, there is healthy inflation, and that's why they are going up. Short term, there will be hiccups, right? When I say short term, it could be in a month, it could be 2 months, it could be 3 months, it could be 4 months, but that's about it. The year after that, or from a 12 to 24 months perspective, rising bond yields is good for the economy, growing, especially for a growing economy like India. Okay, this is another another slide I wanted to highlight, and let me try and the idea is not to make it sound technical, but to make it very, very simple, which is the credit growth, which is the banking credit growth, right, was very, very healthy at almost 20 to 30% in the period 2004 to 6, while the GDP was growing at about 8% or thereabouts. Now that banking credit growth has slipped to low double digit or even single digit. Yesterday we got the data for last financial year when we clocked about sub 6%. FY21, March 21 year ending, we have clocked sub 6% credit growth. Now, when you look at the multiplier, the credit growth has grown at 2.8 times the GDP, the real GDP growth in the last 20 years, right? And the high and the low there could be, the low could be 1 time and the high could be 4 times. That's been and it's been just not, the multipliers just not been there. It's just not been working for the last couple of years. And we look at some of, and let's go down deep and understand why that's happened and why it can pull up fast. Okay, this is like breaking that banking credit growth uh, to the various sections, right? Various sections, यहाँ पे हम जो बोल रहे हैं, एक है retail, एक है services, एक है industry, right? Let's focus on retail because वो best है, वो पहले भी best था, आज भी best है, right? Relatively best, right? When I say retail, it is people like you, me, people, the businessmen, service, they were taking some kind of loans, housing, consumer durable, personal, earlier, and now they are still also taking a loan. The amount may vary, but they're still out there and availing of loans. So that number was growing at 20%, between 15 and 20%, let's say in 2008, right? That purple line, that has come down to close to 10%. It's still healthy. 10% is still healthy. The other 10% growth rate line, which is the light blue, is which is retail. The earlier one was the loans to services. It's largely the loans to industry, which is that red line there, which is leading to this overall credit growth being very, very subdued. It used to grow at 20% plus consistently between the period 2004 to 2011 and 12, right? You see that pink line, and it used to be always higher than 20%. That has come down to zero. What does it mean? It means the industry, the corporates, the industrialists, right? People putting power plants, metal plants, steel plants, right? The pharma plants, new capex, that is not happening. That is where, and this is 30% of the overall credit. So when 30% of the overall credit is not growing, it is at zero. You can imagine the 70%, how, if the balance 70%, if it's growing at, let's say, the balance 70% is growing at, let's say, 8 or 9%, you multiply that and you'll get a number which is close to 5.5 and 6% weighted average. So the industry, the capex needs to shoot up drastically, and it has done that in the past, right? Again, as I said, 2004 to 2006, the private sector contribution rose from 33% of the banking credit to as much as 50% over a period of time, right? In that three-year period, it rose from 32 to 44%, which meant the companies like an HDFC Bank or IndusInd or an ICICI or a Kotak or an Axis used to, on an average, were lending 32% to the private sector, and that increased to close to 44% and subsequently to 50% in that period, simply because they had that risk appetite and there was demand. Now it's both. The demand is not there because corporates are not putting up as much capex and banks are also reluctant. So we are not saying it's going to go back to the same level, which means the current 50% goes up to, let's say, a 70%, but the reluctance of the banks as well as the demand from the corporate side should substantially be better, let's say, a year down the line. And how will that be better? Let's look at the business confidence index, which used to be at 100, and this is on an index level. So which used to be at 100 and went up to 111 in the peak, which is the quarter of December 2019. That went down to as low as 46 and is now at 85. It's still at 85. The quarter 4 numbers is still to be out, but my hunch is it will be plus 90. But it's still a journey that we have to travel from, let's say, a 90 to 111 or even more before that corporate capex comes back. They want to put up more plants, they want to increase capacities, they want to spend money. That period is probably maybe 2 quarters down the line, but believe me, it will surely come. And how do they measure it? They look at overall economic conditions. When I say they, I mean the Tatas, the Birlas, the Hindujas, and the Adanis and Reliances, the big companies, as well as many other 100 the Asian Paints and the Pidilights of the world. the overall economic condition, the present capacity utilization, the present investment climate, and their own financial position. These are the top four parameters on which they judge whether they're having that confidence or not. Okay, this is a very, very interesting slide, and I'll request you to look at it at leisure later. What it means is it's exactly mirroring what happened in India the next 2 years, which is FY22, the last two rows, FY22, FY23. It's exactly mirroring what happened in FY04 and 5. Again, we throwing stats to you. In no way we are trying to, give an impression that the indexes and everything will go exactly the same way. The conditions are right, right? There is no reason one should not do well. To what extent, that only time will tell, right? So FY21, we have grown, the earnings have grown at 21% despite being a COVID year, and FY03, the earnings had grown at 18%. Next financial year, the current financial year, earnings are expected to go up 33%. Same period in that era, FY04, the earnings shot of 42%. And you look at, and it continues in FY23, earnings expected to go up 22%. Us samay earnings had gone up 29%. Broadly, very, as Mumbai it says, mota, it looks like, it's kind of giving the signal that the earnings, and believe me, 3 years of 20% or more earnings growth is like fantabulous. You can't get better than this, right? What it means is you're doubling your EPS from FY22 to FY23. Look at that number, 422 become 828. 3-year period, earnings getting doubled. And believe me, we've just only traveled 1 year in that 3-year journey. That's very important to understand, right? Also, the corporate profit to GDP, which used to be sub 2% in that era of early 2000, and shot up to almost 6%, where in 2006 it was at 5.4%. In 2005 we are again at 3%. So even if we go from 2.9%, which was FY20, the corporate profit to GDP, it's going to still be far lower than 5%, which we had achieved in FY05. So there is room for expansion. It is for real, and it can happen. It will surely happen, right? That's the larger point. The larger point we are trying to make out here. Okay, and this is the same to be seen in conjunction, right? Which is, as I said, last time around FY04 to 06, earnings had doubled. India का Nifty EPS double हो गया था between FY04 and FY06, right? And Nifty उसी दौरान had gone up 3x, 3 times, right? Which means the balance was obviously coming from re-rating. The FI flows, they had so much of positivity and the expectation, right? This time around, when the EPS is doubling, as I said, from 422 to 828 ballpark, Nifty so far we have obviously, you might say that FY20 was a negative 19%, therefore we have that base. Friends, you look at the last time around, FY3 में भी negative था, वो ठीक है, -19 नहीं था, -13 था, but a negative base is a negative base, right? On which you उस समय -13 पे हम 75 हमने grow किया था, इस बार हमने -19 पे 60 grow किया है, right? But the larger point I'm making is, friends, there is, if earnings doubles, and our hunches, our calculations suggest it will surely be the case, then you can imagine the journey that is still there for the next 2 years, which is FY22 to FY23. Last time we had the Nifty had gone up 3 times. This time around, still to be seen, but there is no reason why it cannot be a very, very healthy number. And believe me, you and me, we are not here trying to buy Nifty. We're trying to buy sectors. We're trying to identify themes. We're trying to identify stocks, which obviously should do even better, much, much better. Okay, some of the other smaller but relevant things that were there then was, obviously we had a very, very stable, progressive government back then, the UPA in 2004 to 6, and now we have a stable NDA government. Again, reforms, progressive, trying to ensure the GDP grows, etc. These are some of only the faces have changed, but I think the confidence was very, very high back then in terms of in the government, and the confidence remains reasonable to very high in the current government as well. Crude is a very good enabler if it remains, and it's true for dollar as well. And I'll show you in the next slide. Crude being range bound remains a very good enabler. Last time around it was range bound between 40 and $80. This time around again it's just about in between right now. The Brent at about $63 today, and a $40 to $80 plus minus 20 current. It remains. See what it means is that for corporate India, if it remains in that plus or minus 15%, they don't have to bother too much. They don't have to think too much in terms of capex, in terms of trying to ensure that 1 or 2 quarters of price hikes they might not take it later, right? Asian Paints recently decided to up their prices because crude had gone up from whatever $40 to $60, right? So it definitely helps if things are within our. It's the same way the way you approach Nifty. If Nifty is in a range of 15% plus or minus, we have a certain level of confidence, conviction, and visibility. But imagine if Nifty were to oscillate between 40 and 50% year after year. I mean, who will get that confidence, right? As an investor. So it has to be a very, 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 very high visibility stroke controlled range. That global tailwinds were very, very high then, which meant most of the developed and developing economies were growing at 7, 8, 9%. So was India. I mean, obviously the India was growing much faster, number 2 after China. Now as well, you look at 2021, 2022, आज भी इंडिया का जो growth rate है, I mean this is IMF, and we have not put down these numbers. IMF is talking about 2021 India growing at 11.5%, which is close to 2 times that of the emerging markets and the average of emerging markets and the advanced economies, which is close to about 5.5%. And the same continues next year as well, when they would grow at next calendar year, when they are expected to grow at 3, 4, 5%, and we expect it to grow close to 7%. What happens because of this is very important. One should understand is 2020 India was number 6 by rank in terms of GDP, and it will continue the same in 2021. It's expected to be number 5 by 2025 and number 3 by 2030, right? Number 3 after China and US. You see, China moving up one place will do one level of flows for China. India moving up from a number position of 6 to 3 will involve it mean it connotes a different level of confidence stroke. I mean, imagine somebody looking at the world and saying, let's target the top 5 countries and let's launch our product there, right? And they would not focus. Just an example, right? Tomorrow, when they say let's look at, even if the one was to say look at the top 3 countries, India is right up there in terms of being. Obviously, this is what I'm talking about is 9 years down the line. But believe me, the stepping stones of that would be laid out in the next couple of years. We need not wait till 2030. Market discounts the whatever happens much in advance. Please remember that, right? We've learned it in the last 2 decades. Market discounts everything very, very much in advance. So 2030 में जो आज हम देख रहे हैं वो बहुत साल पहले उससे discount हो जाएगा. No, the market will not wait till 2030 to realize that, oh, India is not number 3. How do we change our portfolios? This is what I meant. So the early 80s, China and India were exactly the similar. Early 80s, right? Exactly the similar when it comes to their GDP size. Look at the top left chart. China was 2 times, and this is the GDP weight in the MSCI index by GDP. China was 2 times, right? 19%, 8%. Look at it now. Right after 20 years, I mean, this is the data information, but relevant today. China is 5 times that of India, right? 45% contribution to the index, and India is at 9%, and which is true. India is a 3 trillion economy, so China is close to 4.5 times there. Similarly, what it means is that look at how China, and I couldn't get the earlier index because it's unavailable. Look at the China's weightage in MSCI index. of 38% today versus India, which is at 10%. So China gets 4 times more flows, has the potential to get 4 times more flows because it is 5 times more in terms of the contribution to GDP. Now imagine a situation by 2030 or closer to that stage where India is not a distant number six, which is today in the world. It's a very close. It's amongst number three, and it is very close. It's not. It's probably is again half of China, if not any closer. Definitely much better than 5 times, being 1/5 of China today. So, folks, what I'm trying to highlight is capital flows, the FI money, the FPI money, right? Foreign portfolio investor. FI money एक चीज होती है. The portfolio money is another thing, right? What is the foreign portfolio money? It is the long only funds, right? ये वो funds हैं जिन्होंने जियो में इन्वेस्ट किया 2020 में जून में, right? These are private equities. These are AIFs, right? These are long only FIs, the long term investors जो 3, 5, 10 सालों के लिए इन्वेस्ट करते हैं, जिन्होंने Zomato में इन्वेस्ट किया है, जिन्होंने all the Ola, Uber, all the unicorns of India and the world. This is that money, the FPI. ये उसके लिए भी important है. We spoke about dollar being range bound. Believe me, it helps if dollar remains in control. When I say in control, it means plus minus 5%. Last time around it was 45 to 47. That was the range. 5 to 7% रेंज में था. इस समय भी एक्सपेक्टेशन है कि 5-7% की रेंज में रहना चाहिए, which means 72 से 75. Also means 70 to 75. अगर इस रेंज में रहता है, very good. Because as I said, it's good to have things within a very narrow range than being in a very high range. It helps plan your budgets, both on the P&L side as well as on the balance sheet side when you're planning a capex. Just to put things in perspective, उस समय outperformers कौन थे, underperformers कौन थे in 2004 and 6, right? उस समय कैपिटल गुड्स ने बहुत शानदार परफॉर्मेंस दी थी, कंज्यूमर ड्यूरेबल्स ने बहुत अच्छा दिया था, आईटी ने बहुत अच्छा परफॉर्मेंस दिया था, राइट? बैंकिंग ने उतना अच्छा नहीं दिया था, सिमिलरली ऑटो ने उतना अच्छा नहीं दिया था, मेटल ने उतना अच्छा नहीं दिया था. अगेन बाय द वे, अगर आप इसको थोड़ा सा पीछे करेंगे 2004 से 7 की जगह अगर आप 2003 से 7 करेंगे, ये काफी अलग सिनेरियो देगा. तो इट डिपेंड्स आप कौन सा सिनेरियो ले रहे हैं. अगर आप 2003 से 7 लेंगे तो बैंकिंग इंडेक्स हैड आउटपरफॉर्म्ड, ऑटो इंडेक्स हैड आउटपरफॉर्म्ड, मेटल हैड आउटपरफॉर्म्ड, राइट? इट जस्ट डिपेंड्स ऑन कौन से पीरियड में आपने वो आप देखने की कोशिश करें. What is the point I'm making here, folks, is that there will be sectors, there will be themes that will substantially outperform the broader index. Index अगर worst case हमें लगा, किसी को भी लगे कि worst case यहाँ से 10% से ऊपर नहीं जाता लगा, we will still have sectors which will go up 20%. Within that sectors we'll have stocks which will go up 30%. हमारा फोकस उस पे ही रहने वाला है. वो कौन से स्टॉक्स हैं जो अपने खुद के सेक्टर से 1.5 टाइम्स ग्रो कर सकते हैं? वो कौन सा थीम है, सेगमेंट है जो इंडेक्स से 1.5 टाइम्स ग्रो सकता है? ओवरऑल 2x इंडेक्स से ग्रो कर रहे हैं 2 टाइम्स 3 टाइम्स, वी आर होम. Okay, I'll go through this in a jiffy, but it's very relevant, right? So let me just highlight some of the important slides. What is stock price? Very simple, EPS into PE ratios. The way I describe it is art and maths, right? The left side EPS is maths, the right side is art. When I say art, it means PE ratios like the beauty of a painting, or the how you ascribe marks to a painting. You put a MF Hussain and you put any other beautiful landscape, and you ask 100 viewers, chances are 99% people will go for the beautiful landscape. But it's just that art connoisseur who will identify an MF Hussain and give it that price, right? That's P ratio, right? That is the difference between somebody trying to give a TCS a 10 PE versus somebody giving a 20 and maybe a long only FI giving a 30 PE. अब वो दुनिया ही बदल जाती है. अगर कोई 30 PE दे रहा है और कोई 10 PE दे रहा है, आपका नजरिया बदल जाएगा. And this is what TCS. Imagine a company which is much smaller and has a much lower history, right? EPS हमारे कंट्रोल में है, earnings हमारे कंट्रोल में है. कंट्रोल का मतलब है visibility. Let's have more control, more confidence on EPS, and if that be the case, market अपने आप PE के through reward करेगी. Very important slide that I'm going to be showing you next. We've always heard of time in the market versus timing the market. I'm introducing a new concept, which is which is time in the market versus chasing returns, right? Let's see what it means. किसी भी पोर्टफोलियो में हम जब एक्सपेक्टेशन रखते हैं कि कितने से ग्रो करेगा, दो बड़े वेरिएबल्स होते हैं, रेट ऑफ रिटर्न और टाइम फैक्टर, राइट? इसमें से आपको पूछना है अपने आप से, आपके ज्यादा कंट्रोल में क्या है, रेट ऑफ रिटर्न या टाइम? हमारे हिसाब से वो टाइम फैक्टर है। रेट ऑफ रिटर्न बदलता रहता है, कभी आपके फेवर में होता है, कभी आपके अगेंस्ट में होता है। टाइम इज समथिंग जो ज्यादातर 90% ऑफ द टाइम आपके फेवर में रहेगा। व्हाट डू आई मीन बाय दैट? आपको 1 साल के लिए इन्वेस्टमेंट करना है कि 3 साल के लिए करना है कि 5 साल के लिए करना है, एंड एक बार अगर आपने तय कर लिया कि मैं 3 साल के लिए रहूंगा, डू यू डिविएट फ्रॉम दैट बाय ट्राइंग टू बुक प्रॉफिट? वो 3 साल का आपने 1 साल कर दिया, राइट? या 3 साल का आपने 3 महीने कर दिया, वो आपका रिटर्न इतना जल्दी आ गया। पिछले साल FY21 में लोगों को ना इतना शानदार रिटर्न है, प्रॉफिट बुक करो, टेक होम व्हाटएवर मनी वी हैव गॉट, राइट? वो टाइम बियॉन्ड द पॉइंट, वो उसका सेंस नहीं रहा, राइट? लेट मी प्रूव इट टू यू. Let's look at the right example, right? The example on the right hand side. What it says is, एक आदमी है जो 20% रिटर्न ऑलरेडी उसको मिल रहा है, right, on his portfolio. He's not trying to chase 30% return. No problem with trying to chase high returns, right? But when you chase high returns, it comes with its own set of risks, right? Portfolio management risks, which probably you would appreciate and understand more when you've traveled that journey of doing that portfolio construction year after year for many years across cycles, right? I'm sure many of you would have done that, but we are just sharing for, it is more for people who have been in the market only in the last couple of years, more specifically the last 1 year. So there is a person who's chasing 50% more return, which is 30 over 20. 50% more return हो गया ना? 100 रुपए पे आपने 20 रुपए कमाया, 100 रुपए पे आपने 130 कमाया, राइट? 10 रुपए additional that you have earned on a 20 is 50% more return, right? Compared to someone who's in the market for 4 years, right? और उससे वो बोल रहा है नहीं यार, 4 साल की जगह let me just deploy it for another 2 more years, which is 50% more time. You look at the end result, it's largely the same. 100 becoming 299 after 6 years on 20% compounding, and that same 100 becoming 286 on 30% compounding after 4 years. हमारे कंट्रोल में ज्यादा क्या है, वो आपको फाइंड आउट करना है. आपको लगता है मैं 30% ग्रो कर सकता हूँ ईयर आफ्टर ईयर फॉर मेनी ईयर्स, राइट? Okay, you can go ahead and take that approach. Again, 20 and 30 here is just a illustration, right? It could be a 30 and a 45, right? It could be 40 and a 60. It could be 10 and a 15, right? It is only for, आप खुद का अपना चेक कर सकते हैं आपने कैसे किया है. 20 to 30 to us it looks a very reasonable range in which one should expect portfolio returns to be there going forward. That's why we've chosen this example. I hope I was able to put across this point. Time is of essence. That is what is more important. Very amply understood in this example and subsequent, which is Bajaj Finance. Again, a disclaimer: some of the stocks that we would be discussing here would most of our clients would hold it in their existing portfolios, and therefore we would have a vested interest. But let's use it more as for educational and for illustration purpose, and not as an idea that we are recommending today. So Bajaj Finance, over the years, you look at the compounding in those 5 years, those buckets of five years that it has grown. In all of those 5 years, especially the last 3 buckets, the price compounding has been between 40 and 77%, right? And 40 and 77% means the stock is up 100x in the last 12 to 15 years. That's the kind of impact or benefit one gets if one decides to stick around for a longer period of time, right? That's the point I was trying to make there. Same is the case with Bojo Paints. The price has compounded between 33% and 41% in the last 12 odd years in those individual buckets of 4 years, and it is backed by profit growth of close to 20% compounding. So the longer the time you stick around, you put that as a focus area and not the returns, you'll see the magic and it'll play out beautifully. This is something that a portfolio we just wanted to highlight again. You might say Berger and Bajaj are obviously large, well-known, widely held stocks. The Deepak Nitrite we just wanted to highlight is something that again, it happened very, very fast. It has delivered over 500% return, which means it's over 6x versus what we recommended 2 years back. It's still live in many of our portfolios, but the larger point I'm making again here is that there was many times when the investors, we used to get queries ki, should I book profit 100 has become 200 or 100 has become 300, right? If at any stage if we fell into the temptation of trying to book a profit of 100% or 200% or 300%, believe me, this 550% would not have been possible, right? So the point I'm making is, please allow time, please allow compounding to play play the important part which it has to play, rather than trying to chase. We still believe chemical sector, specialty chemicals has a long way to grow, right? And we have in some of our existing portfolios, we have some of the other leading well-known top 10 chemical companies, and we also continue to hold Deepak in some of our other portfolios. We continue to remain positive. Point I'm making is, focus on time as much as returns. Somebody were asking me, we get a lot of questions, what are the themes to play? So according to us, most of these tech spaces like a fintech and edutech, a diagnostic, a financial inclusion, which means insurance, online shopping, a platform business, which is what you'll see a lot of companies getting listed in the next 12 months, like a Zomato, Policy Bazaar, probably one of the cap companies as well, maybe in Ola. So that is another interesting space. Electric vehicles, definitely yes, and nutrition, home care, yes. Again, have you started your journey, or you are just on? You have just started, or you want to increase your ticket size, or you're sitting much on cash? How should you look at it? Our approach is, our suggestion is key long-term focus, right? That's number one. Stay focused, which is again, as we saw on the first slide, trying to get those the frightening faces or those अभी आप नॉर्मल टीवी चैनल में देखेंगे तो ऑब्वियसली पसीना ही आएगा कि यहाँ पे इतने केसेस हैं, इतने केसेस हैं. Just try and stay focused, right? Bottom up approach. If one is more comfortable, in fact, at this stage, we would advocate is staggered buying, right? And trying to not time the market, but just allow it to grow over a period of time. This is the way we bucket our portfolios, which is all weather, the big banks, the large paint companies, the large NBFCs, been there, done that types. They contribute about 50% on an average of our portfolios. The momentums, the chemicals, the pharmas, the upcoming platform businesses, the ITs companies, they contribute, and off late some of the economy facing names from cement and metals. That's in that momentum. And third is where we look at, let's say something in a telecom, something in an infrastructure, right, which is including metals, some metal companies. That would be our circle of opportunity, as we call it, special situation. That would have about close to 10% weightage in our portfolios. This is the last slide, and this is what our products are. You'll get more information on the website. Shailraj will have more to talk about, and how to approach us. But largely, our long-term product, which is our flagship product, something that we have believed from the time it was launched 6 years back till today, is the 5-in-5 health creation strategy. A very focused 20 to 25 stocks, which we think are potential multi-baggers. That's the crux. We also have MPO for people who have limited money, who have more of an SIP money, who are looking at returns less than 12 months. Again, fundamentally backed, right? There is no inside news. There's no chakri. Again, these are all mid to large caps and widely held, right? And of a very, very high pedigree. And we also have a product which is for people who want to look at opportunities in the unlisted space, but let's say something trying to get listed in the next 12, 18 months. How do we get opportunities there and try and have a little bit of that in our portfolio. Yeah, I guess that's where I stop, and I hand it over to Shelraj.
Thank you, Jaspreet, for such an insightful session. I'm sure our participants also feel the same, considering the amount of questions that we've received. But due to paucity of time, we'll be just taking a few questions. Jaspreet, I have clubbed a couple of similar questions so that we can have your views on these more important issues. Let me start with the first question. As an investor, what should I do? Should I wait for the markets to cool down, or should I continue to invest?
Okay, so as you know, that's a very pertinent question. So what we are trying to suggest here is, one, have a long-term focus. The moment you do that, right? The moment you say it's a long-term focus, you are mentally prepared, right? I mean, just to give an example, it's very, very basic, right? The moment if I say I have to grow from let's say an Andheri to a Bandra, or Andheri to a Low Parel, and I have to drive down my car. I mean, there is one level of planning that I do, right? And there's one level of risk बोलो या मन में एक वो रहेगा कि यार मतलब ठीक है रोज का जाना है. The moment I say today I have to travel to Pune, right? There's another level of planning that I need to do, right? And then preparedness that and last is obviously, let's say you want to drive down even longer, which is like, let's say Bombay, Goa. There's obviously, it's a 10-hour journey. You need to be ensure that each and every nut bolt mentally, physically, and your vehicle is in full shape, right? The moment you do that, that in itself will play a big role, right? आज आपने 14,500 के इंडेक्स पे इन्वेस्ट किया, right? 13,500 आ गया तो आप अपने आप नहीं घबराओगे अगर आपने वो 5 साल का व्यू लिया, 3 साल का व्यू लिया. आपने अगर 3 महीने का व्यू लिया, obviously, right? It's bound to happen, right? मुझे पता है, मुझे वो लॉन्ग जर्नी ट्रैवल करनी है बॉम्बे टू गोवा. बीच में हर्डल्स आएंगे, क्रॉस होंगे, एंड अल्टीमेटली 10 घंटे नहीं 11 घंटे में पहुंचूंगा, वर्स्ट केस 12 घंटे में पहुंच जाऊंगा, राइट? बट एज लॉन्ग एज माय अप्रोच इज राइट, I know the directions, I am being guided properly. Let's say I have a Google map, right? My car is in full conditions, and mentally I'm in the best shape possible, right? There's no reason why I will have a big deviation in that. So that's point number one. Point number two is obviously you should have a staggered buying approach. At Research and Ranking, what we advocate is to buy 50% now, and the next 50% in either equal or depending on opportunity, in case there is a correction, you can upfront it. So the next 50% over the next 3 to 4, or maybe on a higher side, maybe 6 months. That's how we are advising our clients. But if not more, at least 50%. See, we are not buying a 14,500 Nifty. We are buying stocks. We see opportunity there, right? And therefore, we are saying at least 50% now.
Okay. The next question. This is a question that I've seen across being asked by multiple people. To what extent will the second wave affect the future earnings of Nifty EPS, in your opinion?
ओके, सो सेकेंड वेव को समझने के लिए एक बार ये भी देख लेते हैं कि बाकी नेशंस में क्या सेकेंड वेव, बाय द वे, बाकी नेशंस में, चाहे वो यूएस हो, यूरोप हो, राइट? चाइना में तो सेकेंड वेव मतलब कोई ऐसा कुछ रहा नहीं, बट much of US and Europe have already gone through a second wave, right? And they are still having those early whatever third wave or etc. etc. But business is as usual, very close to normal there as possible. In fact, US is getting upgraded month after month in terms of their earnings outlook, right? So therefore, यहाँ भी India में भी, right? Why is Maharashtra government taking so much time to announce a complete lockdown? Everybody realizes, right? A complete lockdown is not the way forward, right? You're killing so many jobs, right? You're killing millions of jobs and and a much bigger industry, multiple industries by going into that. You just what happened last year by going into lockdown? Just look at it in perspective. A minus 26% GDP, right, in first quarter when we were in complete lockdown, right? ठीक है, उसका उस समय ऑब्जेक्टिव था, right? आज के टाइम में उसका उतना ऑब्जेक्टिव नहीं. Okay, so coming back, earnings will get impacted, right? But largely for the month of April, all right, that's point number one. Largely in select states, as I said, those 4 or 5 states which affected the most, number one being Maharashtra. And we are also saying कि अगर अफेक्ट होगा तो गवर्नमेंट ऑफ इंडिया कोई बेनिफिट नहीं देगी. कॉर्पोरेट इंडिया उतना स्मार्टली बाउंस बैक नहीं करेगा, राइट? ग्लोबल टेलविंड्स नहीं रहेंगे, राइट? ऐसा नहीं होगा. गवर्नमेंट विल come back and do whatever it has done in the last 12 months to ensure that the economy doesn't derail, the growth engine doesn't derail. Corporate India has already shown what it can do by delivering plus 21% return in the last financial year versus the expectation of even minus 10% mid-year when we were in September, right? They've already shown, right? And we have enough data available in other developed nations like US and Europe to see how they have come out of it without derailing the economy. And last but not the least, please remember, vaccine is available today. 10 crores Indians have got vaccinated. 6 months down the line, probably, I mean, you can do your own maths. Our census, 90% of the vulnerable population or the population who wants to get access to that, or who really should get that vaccine, 3 months, 4 months, max 6 months down the line, 80% of India's population who is vulnerable, who should get it, will get it. So not much of a deviation. We should be more or less in a comfortable zone. When I'm saying comfortable, it means that the deviation is not beyond 15%.
So would it be right to say that it's going to be a temporary deviation or temporary correction or whatever that one might expect in the future growth earnings?
Yes. So there are two things to highlight here, and which I should mention. One is obviously, is it a earnings lost, or is it a profit lost opportunity, or is it something which gets shifted, right? We have seen it last year that in many cases the profit gets shifted, right? The profit pool gets shifted. If a company was if all things being normal, if it could do 100 crores of profitability, but because of this temporary deviations like a second wave, it ended up doing 90 crores, a very high chance, a very, very high chance that 10 crores of deviation will get spilled over to the next financial year. Majority of it will get spilled. Okay, let me just give an example. What it means is कि 2020 में मैं जो बर्गर खा सकता था, जो मैं मूवी देख सकता था, जो मैं शॉपिंग कर सकता था, वो पोस्टपोन हो सकती है? नहीं, राइट? बट जो मैं बिजनेस के लिए लोन ले सकता था, बिजनेस एक्सपैंड कर सकता था, घर खरीद सकता था, राइट? एजुकेशन के लिए पैसा खर्च कर सकता था, राइट? मेजॉरिटी ऑफ द एक्सपेंडिचर दैट वी डू इज लॉन्ग टर्म. वो वाला घर पेंट करा सकता था, राइट? फर्नीचर खरीद सकता था, बाइक खरीद सकता था. ऐसा नहीं कि बाइक नहीं खरीदी या कार नहीं खरीदी पिछले साल, तो अब मैं खरीद नहीं सकता ना, नेक्स्ट डे खरीद लेंगे. It's not a perishable commodity like a burger or an entertainment zone or a multiplex or a movie or a tourism कि last year हमारा holiday नहीं हुआ, तो अब तो वो इस साल भी नहीं हुआ, नहीं, right? Last year एक साल में एक बार अगर होता है, next year तो हो जाएंगे. It covers up, right? So please understand in that context, majority of the profit has a very high potential of getting spilled over to the next financial year.
Okay. The next question is to do with the rising bond yields. We have a question saying that why do rising bond yields cause fear in the markets?
Yeah, I knew this would be one of the good questions. Yeah, thank you for that. So yes, as I explained earlier, please understand, when do bond yields rise? Bond yields rise when there is inflation or inflationary expectations in the economy. When does inflationary expectation set in? When demand goes up. What is inflation? Inflation कहता है कि आज एक commodity 100 रुपए की थी, कल वो 101 की हो गई है, 4 दिन बाद 102 की हो गई है, 1 महीने बाद 106 की हो गई है. क्यों होगा वैसा? क्योंकि डिमांड बढ़ती जा रही है, मंथ डे आफ्टर डे, वीक आफ्टर डे डिमांड बढ़ रही है. व्हाट डज इट मीन? देयर इज ग्रोथ इन द इकोनॉमी. आज आज एक आदमी है जो जो बाइक खरीदने आया है, कल दो आ रहे हैं, परसों चार आ रहे हैं, राइट? अगर ऐसा हो रहा है तो क्या होगा? Obviously the GDP is going up. Overall macroeconomic conditions are favorable. That is why people are going out and spending more, right? Therefore, rising bond yields means the overall economic setup currently, or which is emerging in the future, is much brighter, and therefore we are moving in from a zone of -7%, to put it in context, which was the last financial year GDP, to a 10% or more GDP in the next financial year. By the way, RBI talks of 10.5%. Many large brokerage MNC brokerage houses talk of 12.5%, right? And IMF is somewhere in between. So 10.5 to 12.5 is a very good number to play around with for the current financial year, which is FY22.
Jaspreet, I understand that we've already shot the time in terms of the 1 hour time limit, but I'm going to be a little cheeky and try and push in one more last question. Why have FIIs been so bullish on India over the years, despite the market swing on both the ways? Considering we've seen the extreme downside also, and we've also seen the markets reach their all-time highs also.
Okay, so again, this is for this I'll have to combine a lot of what I said earlier, which is that which means that earnings growth in India is expected to bounce back smartly. Just one second. I just so it is kind of saying that the earnings growth have bounced back smartly. Therefore, the FIs are more positive on India. The fact that there are opportunities in India, let's say the IT sector, the pharma space, right, etc., where they have pulled in a great amount of money, and the fact that the investments made in their home country, be it US or Europe, they are not yielding as much return as one would thought, as they would have wanted it to be. So they would obviously be looking at better opportunities, like something like in India, where we could get a much better opportunity. So I think you combined all of this: the high GDP expectations, the high earnings growth, the fact that there are many opportunities in emerging sectors, like a chemical, like a pharma, like an IT, right? The fact that their own country, they are getting at subpar earnings growth. Or maybe asset growth, not earnings growth, I mean asset. Their expectation on a bond or an equity or a real estate, and that money is obviously flowing to emerging markets. And believe me, it's not. I mean, by the way, it's not only in India. It comes to emerging markets. Within emerging markets, as we saw, India gets its fair share of allocation, right? Fair share of allocation meant, and that one of the slides we saw, China currently in the MSCI index is 38%. India is about 10%. So emerging market में जितना उनका पैसा आएगा, तो वो उसमें से इंडिया को 10% मिलता रहेगा. That's broadly how I would like to put it that way.
Just 1 second. Thank you very much, Jaspreet, for your time and taking us through this the second chance or a second wave presentation. Big thank you to you, and a big thank you to all our participants who have taken out time on this day today. Right now, we have just shared a link on the chat box where you can book an appointment with us and probably discuss, have a detailed conversation about the markets or anything that you want to inquire about in terms of your investments. You may also drop in your queries, your suggestions, or your feedback on support@researchandranking.com. With this, I would conclude this studio event, and thank you very much for joining us today on this auspicious day. Have a great year ahead. Thank you.
Thank you.